Hi, everyone. Thanks for joining us today for the webinar. I'm Elizabeth here at CityBase. Just to give you a little bit of background on our company, CityBase is a government technology company that transforms the way cities connect and do business with constituents. CityBase works with local governments, agencies, and utilities to integrate payment functionality, business processes, and communications on a central cloud-based platform that consumers can access through the web, mobile, kiosk, IVR, or point of sale. So today's webinar topic is we're talking about optimizing payments here, both the constituent-facing technology as well as the behind-the-scenes payment rules, flow of funds, and revenue management tools. We'll cover some key basics as you think about improving your payment interface and infrastructure, especially if you're procuring new payment technology. We're very excited today to have some of CityBase's most knowledgeable men named Matt in the room. We have Matt Zwicky, Senior Product Manager, and Matt Johnson, Lead Solutions Engineer. Just a little housekeeping before we get started. If you have any questions to ask during the presentation, please type them into the question box by clicking on the Ask a Question button on the left-hand corner of your screen. And we have a dedicated Q&A section at the end of the presentation. So without further ado, I will turn it over to the Matt.
All right. Thank you, Elizabeth. Matt and I are really excited to be here. Talking about payments is something we do day in and day out, and it's fun to be able to bring some of our conversation to a new audience. So I hope that some of the things we talk about here today land well and are useful to everyone in the audience, but also, well, everyone, that has joined us today. So payments, they're both common and they're required in some cases. But in any case, they're an opportunity for cities and utilities to build a more positive relationship with the people and the businesses that they serve. So we think that cities can deliver a payment experience that people will actually love by making it easy and intuitive for those constituents who pay, but also making it easier for the employees that manage those transactions within the city or the utility. So today, these are some of the things we want to talk about. We're going to get into a little bit of Payments 101, going back to school, hitting on the basics of the who is part of the payment process and what are some of the events that happen. Then we're going to touch on some ways that you can drive down processing costs. That's always an interesting topic. We're going to touch on the importance of multi-channel acceptance. So there are lots of ways to pay and lots of different methods to pay with. And then we're going to touch on understanding risk and fraud protection and chargebacks, and always have time at the end for some Q&A. So let's move on. First thing in Payments 101 I wanted to mention was that if you're someone who works for a city or a county or a utility that intends to collect payments from your customers, and they want to use a credit card, it's important for you to understand a few things about payments. So we're going to kick off today with a crash course in Payments 101 covering the actors and the events you want to be familiar with.
All right, thank you for the intro, Matt. So we're going to start off by talking about credit card payments. And when processing credit cards, there are primarily two steps. First is the authorization, and then the settlement. So we'll be going through both of those steps and showing you who the different players are and what roles they take throughout the credit card payment process. The first step of the authorization involves the merchant or the cardholder. In this case, the merchant would be the utility or the government agency that is responsible for collecting the payment. This first step is primarily collecting the payment information, so you're either inserting the card into a chip reader, swiping the card, entering it online. The reason it's the merchant or the cardholder, if you're at, let's say, a point-of-sale terminal, the representative of the merchant, or the cashier is a good example, may enter that card on behalf of the cardholder. Or if you're paying online, the cardholder would enter their own information. In the second step of the process, the merchant is responsible for more or less determining the amount of the transaction. So if you're a utility company, that could be the amount you have due for your water bill, or for government agency, it could be the amount for a permit that someone is trying to pay. It's the responsibility of the merchant to determine the amount that the cardholder will ultimately pay for their transaction. For the next step, we have a gateway vendor. So this would be your technology vendor that facilitates a lot of the interactions between you, the merchant, and your acquirer to run the credit card transaction. You'll oftentimes see this player involved if you're taking web payments because they manage a lot of that interface and will collect that card information and submit it to the acquirer on the back end when the cards are run. So once that credit card information is collected, the gateway vendor will submit it to the acquirer. The acquirer is a large financial institution that partners with a bank and is integrated with all of the card brand networks. So you may have heard of companies like First Data or WorldPay, formerly known as Vantiv. These are some of the acquirers in this space, and they facilitate that interaction between the merchants and the gateway vendors and the card brand networks. So they govern the rules and regulations around the card brand networks and making sure that you're in compliance with Visa's rules, and then will manage those communications between either you as the merchant, the gateway vendor, between the card brand networks. Next, as the acquirer passes that message along, the card brand network, so Visa, MasterCard, American Express, or Discover, will take that information and reach out to the card issuer. The card issuer in this case would be someone like Chase Bank that is actually issuing cards to cardholders and is responsible for that line of credit that is extended to the cardholder. At that point, it's the responsibility for the card issuer to determine if the transaction should be approved or declined. So if you have, let's say there's a credit limit on your account and you don't have enough available balance for the transaction, the card issuer would decline the payment and then send that response back. Or if everything looks okay, they would send back an approval. At this point, we follow back down the chain that brought us to the card issuer. So that response is sent back to the card brand network. The card brand network is responsible for taking that message and routing it back to the appropriate acquirer, letting them know that the transaction was approved or declined. Similarly, the acquirer integrated with the card brand networks takes that information and then forwards it along to the merchant of the gateway vendor. Again, the gateway vendor will then take that information and transmit it along to the merchant, being that technology layer in between the acquirer and the merchant, so that the message can be passed along. Now the merchant has the response for the authorization and can complete the transaction accordingly. So if there's a decline, they could tell the cardholder, I'm sorry, you need to try again or use a different method of payment. Or if there's a successful transaction, they can clear out the payment, or if they're paying a utility bill or a permit as an example, they would mark those items as paid. And lastly, a message is returned to the card holder that their payment has been processed or declined, so that they also receive a similar message. So here's a quick overview of what the life cycle of an authorization looks like. There are a lot of different players and roles and responsibility involved throughout this process. So there's a lot to digest here, but it's important to understand who all the different players are. So there's an idea of who's responsible for what when you're processing transactions, and especially when you're going out to contract, to understand who can provide you the necessary services that you're looking for.
Matt, there are a lot of actors in this cycle. How long does an authorization usually take to make its way around that circle?
The industry standard for an authorization is under 4 seconds. So while there's a lot of players involved, it is a very quick process that is, as a card holder, you would never know that there are this many people involved, but there's a lot going on behind the scenes to facilitate your transaction.
Yeah, good to know.
So the second part of the credit card workflow is settlement. So for settlement, this is largely where money exchanges hands between the different players that are involved. So you as the merchant would receive your funds, and the card issuer would send those funds over through the line of credit that they've extended to the cardholder. So first and foremost, the merchant would submit the transaction to the acquirer. This usually happens in a batch process once a day, and it's often automated. So you're not clicking a button saying close the batch or submit the transaction. It's happening on a regular cadence every business day so that your funds come in a timely manner, in a repeatable pattern that you can expect. When the transaction is submitted, the acquirer is responsible for crediting the merchant's account, and then they also submit a transaction to the card branch for settlement. So the acquirer will be responsible for actually putting the money into your bank account for the credit card payments that you have processed. Similarly, they're reaching out to the card brand networks to receive the funds from the card issuers because they have deposited the money into your account, and they're expecting those funds to come back from the issuer as well. The card brand network sits in the middle between the issuer and the acquirer, facilitating those messages and those transactions between those two entities, making sure that the acquirer is able to receive the money from the card issuer and that the card issuer understands which acquirer is requesting the funds. As I had said before, the card issuer is responsible for extending those funds and providing it to the acquirer, and they also post the transaction to the cardholder account, so the cardholder understands what they've paid for and can see that on their statement. And lastly, the cardholder would receive their statement either electronically in the mail through a mobile app from one of the credit card companies, seeing what their payments are that they've made through their payment period. So you may have seen on your credit card statement or through one of the mobile applications transactions that show as pending, and then a day or two later they'll show up as settled and they'll be officially on your statement. So when a transaction is authorized, it will show up as pending on your account, and it's not until it's settled that it actually shows up on your merchant statement and it's officially hit your account. And so those are the two processes, authorization and settlement, that dictate whether the transaction has been completed. Great. So here's an overview of what that process looks like end to end and all the different players, just to give you an idea of how that works. And again, this happens more or less offline, so you're not waiting for this to occur. It happens at a regular cadence every day. So there's not as much of a timing component with it, but there's still 3 different players involved every time the funds hit your bank account for the credit card payments that you process.
So again, there's a lot of people involved in this, in the workflow of a payment being made through a credit card. I'm assuming that each one of those actors wants a little piece of the action and wants to get paid.
That is a great segue to the next topic. So how does everybody get paid? So if you've processed credit cards before, you understand there are a lot of fees involved, but it's often hard to understand who exactly is getting paid for all those fees, where are they going, who are the different players involved. So now that we've given a breakdown of the different, the different vendors that may be involved in your payment process, we'll give a quick rundown of what the fees look like. So we have some of the major categories outlined here: interchange fees, acquire fees, card brand fees, and then convenience and service fees. Interchange fees are often the largest part of your credit card processing fees. They are paid back to the card issuer. So that would be, as an example, Chase Bank. They are regulated by the card brands. So Visa, MasterCard, American Express, Discover dictate what the interchange fees are, but the fees you pay actually go back to the card issuer. And these fees vary widely across different market segments, different merchant category codes, which we'll go over in the later section here. So it's important to understand what these fees are and getting that breakdown so you can keep tabs on them and make sure you're optimizing them. There are also acquirer fees. These are oftentimes a smaller amount of your total processing fees. They are somewhere in a handful of cents per transaction as you're processing them, and these get paid back to the acquirer every time a transaction is run. There are also card brand fees. These often show up as dues and assessments on your merchant statement. Your merchant statement would be the summary of all your fees that you have accumulated over a billing period. And these get paid directly to Visa, MasterCard, American Express, Discover. Lastly, there are convenience and service fees, and these are a little different flavor of a fee because they are options for you to pass through cost to constituents as a means to cover the interchange, acquire, and card brand fees. There are rules and regulations around when you can and cannot charge convenience and service fees, and we have a blog on our website that gives a good breakdown of what those different fees are that we'll be sending out as a follow-up. But it is an opportunity for you as the merchant to cover some of those fees and pass it along to the consumers to make processing credit cards more affordable. So we'll segue into the next section here. We'll talk about different ways that you can decrease processing costs.
Yeah. So now that we've covered some of the fundamentals, let's take a few minutes to talk about some ways that you can optimize your payments to reduce those costs and in turn increase some revenue. So specifically, we're going to focus on understanding processing costs, reducing administrative costs, managing risk, and managing chargebacks. So let's start with interchange. You want to tell us about interchange, Matt?
Yeah, so we had just talked about interchange in that previous slide. There are ways for you to decrease your interchange fees. There are two kind of major ways you can impact those. First and foremost is working with a vendor who can provide level 2 and level 3 data when processing transactions. So level 2 and level 3 data. Examples of that would be a SKU if you're selling any sort of merchandise, a purchase order number, a tax amount. There's a list of standard level 2 and level 3 data fields, but the more of those that you provide, the card brands will put you into more favorable interchange categories, and it effectively lowers your interchange rate. So making sure that you're providing that information where applicable is very important in reducing your fees. Second, making sure you use the proper MCC code. So MCC stands for Merchant Category Code, and it more or less designates what industry you operate in. So there's an MCC code for tax payments, there's an MCC code for utility companies, parking garages, etc. Certain MCC codes are eligible for either lower or fixed interchange categories, specifically government MCCs and utility MCCs have special programs around them to lower your interchange. For utility companies, if you are processing under the utility MCC code, you can qualify for fixed interchange rates, which can greatly lower your costs. Additionally, if you are processing under the government MCCs, there are special government merchant category codes that also have lower rates. So making sure when your merchant account is boarded that it has the proper MCC code under it is important for optimizing interchange. As we talked about before, you can also pass through some of the cost with service and convenience fees. So as I mentioned before, there are a set of rules around processing these fees. Some of those examples are service fees are only available to select government and education merchants. If you fall under the appropriate MCC code, you're allowed to charge service fees for your transactions. Service fees can be a fixed or a variable amount, so you can charge a dollar minimum with a 2% service fee, and they can be charged at any channel. On the other hand, convenience fees can be charged under any MCC. However, it has to be a non-face-to-face payment channel. So an example of that would be a payment kiosk or a website. And it has to be a convenient payment alternative from your primary payment channel for accepting credit cards. So if you only, as an example, if you only accept credit cards at your kiosk, that would not be a convenient payment alternative, so you wouldn't be eligible to charge convenience fees in that scenario. There are a number of other rules around it, and again, we'll be sending out a link to a blog that gives a breakdown of what some of those service and convenience fee rules are. Great. As we had walked through the workflow for authorizations and settlement, you'll notice that there are a lot of players involved in processing those transactions. As you can imagine, the more vendors that are involved, the more fees that are assessed for the transaction. One way to reduce cost is to eliminate some of these third parties that are involved in authorizing the transaction, namely the gateway vendor. So they provide that technology layer that's in between the merchant and the acquirer. One way to do that is to partner with a payment facilitator. So a payment facilitator fills that role as the technology vendor, but they are also a legal agent of the acquirer, so they can fill both roles of the technology partner and the acquirer, eliminating one of those additional steps in the process. And CityBase is a registered payment facilitator, so that's generally the model that we recommend to our clients as a way to optimize the processing fees and lower operating costs. Lastly, encouraging e-check, electronic check payment options is another great way to lower your processing cost. You've probably heard the term e-check or ACH in various circles before. They're largely synonymous. It more or less boils down to accepting a payment using your checking account number and routing number to process the transaction. The benefit of processing via e-check is that the costs are significantly lower than credit cards. Credit cards, on average, cost about 2% of the transaction total. This can change based off your MCC and some other factors, but that's a good baseline. Whereas e-check payments have a largely fixed rate at around 20 cents per transaction. So as you start to get into higher dollar amounts, you can see that with a variable amount of 2%, the cost of processing credit cards can get very, very high. So electronic check is often the better option, and the more that you can encourage your constituents to pay by e-check, the better your processing costs will be.
Great. So with all of those ideas in mind of how to reduce your costs, we should keep in mind that that's important because when you reduce your costs, you then have the opportunity to free up that money to better serve your customers with more options. And one of those opportunities is to be able to find your customers through more than one channel. So we're just going to talk about multi-channel acceptance for a few minutes. So while bank and card processing concepts are pretty standard across all of the card brands and the banking partners, the organizations and businesses that accept them vary quite widely. So specifically, the needs of cities and counties and utilities aren't really exactly the same as the needs of online retailers or restaurants accepting payments. If you think about it, usually cities, counties, and utilities are in the business of serving 100% of the population in their region, with either goods or services that are often intangible. So finding those customers where they are can increase the likelihood of them making an on-time payment, which is maybe more important than, say, like an e-retailer is really optimizing for shopping cart conversion, or a restaurant is optimizing for allowing for fast, flexible table-side payments in the restaurant. So again, finding customers where they are, where they live, means offering payment channels that meet different needs. Ideally, your payment offering will include a web, mobile, even a phone option. That's often referred to as IVR, and maybe we've probably all experienced that one way or another of paying by phone. So even kiosk options and in-person options for your customers and your constituents who pay in cash are ways that you can reach 100% of your population and realize that revenue on time. So with multi-channel acceptance, there's also a worry of administrative costs. When you have those payments streaming in from your customers through the web and from your kiosks and from your cashiers and the point of sales, you probably want to or should want to manage that revenue in one single place. And there really is no reason why credit card, ACH, and even cash payments in those channels can't be managed within one platform. Because when your accounting team is performing their daily tasks of doing the research and the reporting and the reconciliation of their payment deposits, their efficiency and their time is made a better use if those tasks can be completed all in one place. All right. So far we've been talking about how you collect payments and revenue, but things don't always go as expected. So we're going to take a couple minutes to talk about the things that can go wrong and disrupt the normal payment life cycle.
So there are some general steps you can take around risk management and fraud protection that can help avoid some of those unpleasant scenarios you can run into when processing payments. First and foremost, you should, in conjunction with your merchant services provider, regularly review your transaction and chargeback volumes. This should be done minimally quarterly, but monthly is a great cadence that you should look at for reviewing your merchant statements, seeing how many chargebacks come through, just making sure nothing looks abnormal. It's important to look at spikes both up and down in both of these categories. While higher transaction volume may seem great if it's a significant spike that isn't explained by some seasonality, it's likely something that you should look into to make sure that there isn't some fraudulent activity happening on your merchant account. Additionally, when processing electronic checks, you can implement e-check verification. So this uses data from many of the large banks to understand if the account is currently open and in good standing, if it has a positive balance, and can greatly reduce the number of returned ACH items that you have from processing your checks. Lastly, you can also look at implementing data-driven fraud prevention tools that will look at things like where is the device located that is trying to make the payment on your website, how does that location compare to the billing address, and if there's a shipping address, how do all of those locations compare to the shipping address, and then score the transaction accordingly. And you can set business rules that would say, accept this transaction, put this transaction under review before processing it, or outright decline it. There's many other rules you can include by using some of these data-driven tools, but that's just one example, and it's a great way to hone in on some of the different trends that you may be seeing with your payment processing activity.
Okay, so one of the most frequently asked questions we get is questions around chargebacks. So if you're accepting credit card payments from your customers, you are eligible and more than likely going to have to know how to deal with chargebacks. So the couple of things that we want to make sure that you understand. First, chargebacks are, they follow rules and processes that are owned by the card brands. So that's Visa and MasterCard. They really set the rules. Chargebacks are initiated by your customer. And there's really nothing you can do to prevent that. It's actually a customer right that is protected by the card brands and something that you agree to when you sign the paperwork to accept card payments. When a chargeback does occur, the funds are returned to the customer from your account right away, and there isn't anything you can do to prevent that. That's just part of the process. So when the chargebacks do come in, a lot of times it's hard to understand why did I receive this chargeback? And there are a couple of basic things you can look at. One is a reason code that is assigned to the chargeback. And that's assigned by the card issuing bank. So when the cardholder opens the chargeback, they'll typically say, look, I didn't make this payment, my card was stolen. That results in a fraudulent reason code. But they may say, I don't recognize this item on my statement, or I received the package of the thing that I purchased, but it was damaged or it doesn't work. And I wasn't able to get my money back from the merchant, so they open a chargeback. So those reason codes are often the best way to understand why your chargebacks are being originated by your customers. Now, you're not totally out of luck. You can dispute a chargeback. There often is a lower likelihood of winning a chargeback, but you can if you're able to provide compelling evidence to show that the transaction was deemed correct from your perspective. And one thing that we've seen with many of the organizations we work with is that being cities and utilities, we encourage them to simply accept the chargeback rather than trying to dispute it, and then in turn mark that obligation as unpaid so that it can be charged for in the future. So a good example of that would be if a customer charges back the amount that they paid for a parking ticket, you can just mark that parking ticket as unpaid and still due to the city. So what else can you do to avoid chargebacks? Well, a couple of things that we recommend to the people we work with. First is enabling some of the verification options that are part of that authorization lifecycle that Matt talked about up front. So one is the CVV code, which is the number on the back of your card, and also a zip code verification. That's something that is typically configurable, where you can, in the process of that authorization, get a kind of a response from the network, and then set rules around what you're willing to accept and what you're not willing to accept. And that can help avoid fraudulent transactions from happening in the first place. The second thing is having a really good statement descriptor. So in that case where your customer doesn't recognize the charge on her statement, you could have avoided the chargeback that she opened against you if you had a better descriptor on your statement that she would have recognized. Another thing we recommend is making it really easy for the customer to reach your support. So offering your phone number and your email or an email address without a lot of roadblocks is a great way to allow your customer to talk to you before they open a chargeback. Another thing that we recommend is including a really clear description of your refund policy in your terms of service, so that there's no question around when a refund is available and when it isn't. And that's something that the card brands will look for also in your compelling evidence. And then lastly, try working it out with the customer. Issue a refund rather than waiting for a chargeback to come in, because in either case, the money is being taken from your account, and when a chargeback is opened, you're also paying an additional fee. All right, so I think that kind of wraps it up. I want to finish by mentioning that we think the public sector has a really unique responsibility to serve every single person, regardless of their needs. and it is possible to deliver a payment experience that people love. By understanding the payment processing and today's available financial technology, we want to make sure you're better equipped to make decisions about how you take payments to meet the needs of your customers and the people who serve them. So with that, I believe we're going to throw it back to Elizabeth to see if any questions have come in from the audience.
Great. Thank you, guys. That was great. As a reminder for those of you listening at work or home, if you haven't already done so and you have a question, please go ahead and type it into the box by clicking the Ask a Question button on the left-hand corner of your screen. We'll try to get through as many questions as we can, but if we don't get to yours, we can certainly follow up with you guys after this webinar. So we do have a couple already. So what would you guys say, at what point should a city start considering replacing their payment solution?
Yeah, that's a great question. I think we hear that quite a bit from the people that we're talking with. And a couple of primary things that come to mind are questions that you're asking yourself. So are you able to offer those flexible payment options to your constituents, like different channels, flexible payment plans, things along that line? Another question to ask yourself is, are you able to manage your payments all in one place? Or are the people in your back office forced to log into a number of different portals to deal with their card payments and the check payments and the kiosk cash? That's another good question to ask. And the third one is simply, are you struggling to maintain PCI compliance? So I know that credit card numbers are very sensitive, and you want to make sure that you're following the highest level of PCI compliance, and there are vendors out there that can help make that a lot easier if it's something that you're struggling with.
Cool. Let's see, we have another one here. Is it possible to pass fees on to the end user for certain transactions and not other transactions?
That's a great question. Yeah, so we had touched on some of the convenience and service fee rules earlier on in the presentation. You can pass on some of those fees to the customer if you're falling under the correct merchant category code. And if you are at a convenient payment channel alternative, that would allow you to charge the convenience fee. So you can also charge service fees for recurring payments. So if you have like a monthly bill that goes out, you can charge service fees for that. However, you are not able to charge a convenience fee for some of those recurring payments. So really understanding where you qualify and which fee type you qualify for will let you make that decision and understand when you can or cannot pass those fees through.
Well, one last question here, I think. So how is Amex different than some of the other credit card brands?
That's also a great question, and one that's oftentimes asked. So American Express is a little bit different than the other card brands. They have more or less taken the card issuer, the card brand network, and the acquirer and created a single entity that manages that whole part of the experience. So that's often why you'll see American Express transactions settle on a different timeline. So it'll come in as its own deposit into your bank account. It's also why there's higher cost to merchants. So American Express overall has higher processing fees associated with it. And you also have to go through a separate onboarding process and have a different merchant ID set up just so you can process the American Express transactions. So with those differences between the other card brands and American Express, it makes it a little more difficult and a little more of a process to set up the American Express payments. And there's a little more nuance in understanding how those transactions flow through the system because it has its own pipeline where it's running all the payments.
Cool. Well, thanks, everyone. I think those were the last of our questions. Thank you all for spending your time with us. Please go ahead and watch your email for the on-demand recording of this video and share with colleagues you think might be interested as well. In addition, within that email, we're going to share some of the blogs that both Matt and Matt have published on some of the topics covered here today, going into a little bit more depth. And we also encourage you to subscribe to our blog. All right, well, thanks, everyone. Have a good rest of your day.